Good morning, everyone, and welcome to the Ankerstar Wealth Market Update. I'm your host, Allison Ankerstar, and today we'll be talking about Uber's partnership with taxis, today's historically low jobless claims, and lastly, this morning's upgrade in Apple stock. But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. Uber agreed to partner with taxi companies in New York City. What does this mean for the consumer and the stock?
Well, hey, good morning, everyone. And you can see the article here that was announced either last night or early this morning about, Uber dealing with partnership with taxi companies. This only makes sense, right? As a consumer, you would want to go to a one-stop shop to be able to pull out one app and find either an Uber, Lyft, or a taxi or whatever it is to be able to go around. So I think, honestly, it's something that's probably overdue. We'll see how it works in New York City. Obviously, taxis are regulated a little bit differently than Uber, where they can adjust its prices based on volume, where I don't believe taxis can. I think it's set rates as far as I know. But really, for a consumer, that's the way it should be, right? Just want to get point A to point B, and I don't really care who takes me between the two. But as far as the stock itself has been kind of challenged, right? So when you really look at the chart, I've not been a longtime believer in Uber just because you have the direct competition with Lyft, and it seems like it's a razor thin margin. I prefer software companies and things with a lot more margin. But here you look at a 6-month chart of the stock, and it's been kind of a house of pain, all the way up from almost close to $50 to down to $30. It's obviously bouncing on this news. So I would say stay away from the stock. That's just my opinion. You could look at this chart and have a completely different conclusion. But I think just because of the razor thin margins, I would stay clear of it.
Next, this morning's jobless claims number was the lowest in over 50 years. What does this mean for the market?
Yeah, it's kind of crazy, right? As far as, the numbers, this is the article from CNBC.com, unemployment going down to 3.8%. You can see the raw numbers there. Those are a little bit, tough to interpret. But when you hear something like jobless, the new applications for jobless benefits dropped to a 52.5-year low, that's insane. 50 years they haven't been this low. So really, when you look at the situation, people are worried about the Federal Reserve raising interest rates too quickly and causing a recession. Well, the one thing where you won't have in a recession is, low unemployment, right? That's more of a high unemployment situation that causes a recession. So I think what this really does for the market is it bolsters the idea that we're not going to have a recession just because we raise interest rates. And if that's true, which I think it is, that means the Fed will be able to continue to raise interest rates throughout the year on the schedule that they have said, and the market's not going to be adversely impacted like it has in the past, where the market gets scared of a recession. This is the exact number that we need to be able to move forward with rising interest rates and still having the market be able to continue to either stay level or even power higher.
Last, Apple stock has been on for the past 2 weeks and received another upgrade this morning. Is the stock a buy, sell, or hold?
I love Apple stock, and you can see the chart here again, a 6-month chart. You look at the highs back around 180, and then recently dropped down to almost 155, and it's bounced back hard. So when you think of, the sell-offs have been a little bit painful, especially for a retail investor that likes to hold on pretty close to the retirement accounts and check the app multiple times a day. Well, with best of breed companies like Apple stock, you can see that when they drop down, it happened here at the end of January. When it comes back, it snaps back really fast. Look how, it leaked off for, several, like 6 weeks, and it snapped back really hard. Same thing all the way down for 4 to 5 weeks where it sold off, and then it snaps back hard. That just shows you the value of the best of breed stocks that people will rush back into. You've heard me say several times, money is like water. It has to go somewhere. So when people get nervous and the money goes out of the market or into cash or into other assets, when the market gets attractive again, i.e. the valuations get lower, that money comes rushing back in. Just think of it like, a bunch of water that has to go somewhere. And when it decides to commit, there it is. So that's what we're seeing in Apple stock. Yesterday was a down day in the market, and Apple was higher. It's up a little bit today, but it's it's one of those stocks that's almost near its highs of $180. So really, really happy with Apple stock. I would say it's a clear buy for everybody, unless you have too much of it already. Not too much, but if you have an outsized position of Apple, you don't need to necessarily add more here. But certainly, if you don't have Apple, or if you only have a little bit of Apple, this would be a good time to add to your position.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.